Greetings and good day. I hope you're doing great. I'm here with you for the daily analysis of Ripple, XRP, on March 2nd. As you saw, Ripple closed its monthly candle last month with a bearish trend. In February, Ripple experienced a price drop of
Do you know why your profits are smaller than your losses? Because you don't analyze your trades, you just execute them. Download the Trading Journal app for MetaTrader 4 and 5 for free now.
over 32%, but then the price rebounded and ended the month with about a 16.5% decrease. Meanwhile, the current market price is still situated directly within the monthly OT zone and has shown a significant reaction toward the 0.786 Fibonacci retracement level. On the weekly time frame, we can also clearly see that after Ripple hit its lowest level in a year at the beginning of February, it encountered investor support and rebounded upward. However, the candlesticks for the past 2 weeks have still closed in a bearish manner. We are currently analyzing the inflow and outflow trends of liquidity into Ripple ETF funds, and you can see that over the past week, there has been a positive inflow. Alongside this positive inflow, we are witnessing the beginning of a conflict between the United States and Iran, which on its own can lead to risk aversion in high-risk financial markets. In tense and wartime conditions, investors often prefer to seek refuge in safe haven assets. On the daily time frame, we can clearly see the downward trend that Ripple is in. After a strong support was observed around the 1.1140 area, the price rebounded upwards and formed a trading range. In the past 2 weeks, the price has not been able to break out of this trading range, and each time it has reached the bottom of this range, it has encountered support. After the war began on Saturday, February 28th, Ripple's price, like all other cryptocurrencies, faced a sharp decline. But as we saw, there was also very strong support, and ultimately Saturday's daily candle closed bullish. This contradiction that occurred here, the start of the war and at the same time the very strong support, has made decision-making somewhat difficult for traders. We are currently analyzing Ripple's liquidity map. Here, we can see that as buy-side liquidity, we have the price range of $1.50 and above the previous highs. Similarly, the most important sell-side liquidity is at the price of 1.3108, as well as in the area of the previous low, around 1.26 to 1.25. By examining the 4-hour time frame, we can see that, similar to the high time frame, the price is in a downtrend and is forming lower highs and lower lows. Each time the price reaches liquidity zones, such as the 1-hour FVG, it reacts to them and starts its downward movement. For this reason, and considering the growing risk aversion in risky markets, we mostly predict that Ripple's price will continue to move downward. As a bearish setup, if we once again see a price increase and the price reaches the $1.50 range and previous highs, we can enter a sell position targeting lower liquidity levels, provided we observe liquidity being collected and a decrease in buyer support. Wishing you success and profitable trades.